Every few months, someone in the media calls Bitcoin a Ponzi scheme.
Sounds dramatic, right?
But is it true?
Well, not really.
It's a catchy headline, but also completely misleading. So today, let's break it down. What actually is a Ponzi scheme? How does Bitcoin work? And why are the two completely different? Stick with me until the end, and you'll have the perfect response the next time someone throws that accusation your way.
Now, first things first.
What is a Ponzi scheme? A Ponzi scheme is basically financial smoke and mirrors. The organizer promises you huge returns, little or no risk, and usually a story that's too good to be true. Early investors might get payouts, but only because new investors are bringing in money.
There's no real business.
No sustainable profit.
Just money being shuffled from the new guys to the old guys until it collapses.
Think Charles Ponzi in the 1920s, or Bernie Madoff more recently. Billions gone. And the ingredients are always the same. Secrecy, one person or group in control, and promises of guaranteed returns. So how does Bitcoin compare?
Well, completely differently.
Bitcoin isn't a company. It's not an investment fund. And it definitely doesn't promise returns. In fact, Bitcoin doesn't promise you anything at all. It's open source software, a decentralized network anyone can join, and at its core, it's just digital money on a public ledger called the blockchain. There's no CEO.
No founder pulling the strings.
No guaranteed 10% a month. New Bitcoins are issued through mining, which follows mathematical rules built into the protocol itself. And here's the key. Every single transaction is transparent. Anyone, anywhere can verify them. Nothing is hidden. So let's put them side by side for a second. A Ponzi scheme? Central operator. Fake returns. Hidden books. Collapses when the money dries up. Bitcoin? No operator. No promises. Transparent ledger. And the system keeps running whether people buy in or not. See the difference? One's a fraud, the other's a neutral technology. But then, why do critics keep calling it a Ponzi? Well, partly because some people do buy Bitcoin hoping the price will always go up. And that can look like speculation feeding speculation. But let's pause here. Speculation is not fraud. Gold, real estate, even the stock market, they all go through bubbles. We don't call them Ponzi schemes, do we? Here's another wrinkle. Scams built on top of Bitcoin have been Ponzis. You've probably seen those shady websites. Give us your Bitcoin, we'll double it in a week. Yeah, those are scams. But blaming Bitcoin for that is like blaming email for phishing. The tool isn't the fraud, the people misusing it are. And let's be honest, Bitcoin doesn't fit neatly into the categories regulators or bankers are used to. It challenges the financial status quo. And when something doesn't fit the box, the easiest reaction is to dismiss it. Remember the early days of the internet? People said it was a fad, or just for criminals, or a giant bubble. Fast forward, and the internet is the backbone of modern life. Bitcoin's going through the same misunderstanding. Let's talk about incentives. In a Ponzi, the organizer always gets rich while everyone else loses. In Bitcoin, there is no organizer. Miners earn rewards for securing the network. Developers propose upgrades. Holders take on risk. And all of it happens out in the open. You might lose money because the price drops, but that's market risk, not fraud. And here's something really important. Bitcoin's design actually makes Ponzi-like behavior impossible. Why? Because the supply is fixed at 21 million coins. No one can suddenly print more to pay off early adopters. And every single coin is traceable on the blockchain. Complete transparency. That's the opposite of how a Ponzi operates. Of course, Bitcoin isn't perfect. It's volatile. It's still early in adoption. Regulations are still catching up. People can and do lose money. But that doesn't make it a Ponzi, that makes it an emerging asset. Its real value comes from being borderless, censorship-resistant money with a limited supply. So no, Bitcoin is not a Ponzi scheme. It's a decentralized technology that challenges how we think about money. You can debate whether it's a good investment or how governments should regulate it. But one thing is clear, it is not a scam in disguise. So next time someone says, "Isn't Bitcoin just a Ponzi?" you know the answer. It's not. And now you can explain exactly why. If you found this breakdown useful, hit like, subscribe, and share it with the next person who's still stuck on that old argument. And let me know in the comments, what other Bitcoin myths should we bust in the next video? Thanks for watching.